Chicago, 1983. The trading pit floor trembles with shouting men in bright jackets, their fingers stabbing the air like daggers. Sweat beads on foreheads under the harsh fluorescent lights. Richard Dennis slides a folded check across a polished mahogany table. $2 million. The room falls silent. "I can teach anyone to trade," he says, voice cutting through cigarette smoke. Even a complete novice, William Eckhart, his partner, scoffs. "Impossible. Trading is innate. You're born with it or you're not." Dennis's eyes narrow. "Care to bet on it?" The check sits between them like a loaded gun. "I'll take complete strangers off the street," Dennis continues, "and turn them into market millionaires in just 2 weeks." Eckhart's laugh is cold. "You're throwing away your fortune." Dennis leans forward, his voice dropping to a whisper. "Or I'm about to prove that Wall Street's most guarded secret isn't a secret at all." He called them his turtles, ordinary people with no financial experience. A waitress, a security guard, a blackjack dealer, a student. In just 14 days, they would master what took others decades to learn, if they could learn it at all. The experiment began behind locked doors. No press, no witnesses, just Richard Dennis and his impossible claim. What happened in that room would eventually extract over $175 million from the markets, create dozens of millionaires, and expose a trading methodology so powerful that Wall Street insiders fought to keep it hidden. The turtles were sworn to secrecy. For years, they kept quiet. Until now. The first turtle steps forward, hands trembling slightly as she recalls that first day. "We thought it was a joke. Then he showed us the system." Her eyes widen. It was so simple. Too simple. But it worked. She glances over her shoulder, as if still afraid to speak. There's a reason they didn't want this getting out. The trading floor churns with bodies, but up in his office, Richard Dennis watches with cold calculation. His experiment isn't just about making money. It's about proving a point that would shake the foundations of financial power. The clock is ticking. 2 weeks to turn novices into masters. $2 million on the line, and a secret that would make some people very, very rich, and others very, very angry. What exactly did Richard Dennis teach these ordinary people that Wall Street didn't want you to know? In 1983, as Wall Street traders battled in the pits for millions, one man conducted an experiment that would shake the financial world to its core. Richard Dennis, a commodities trader who had turned $1,600 into $200 million, made a bet with his partner, William Eckhart. The wager wasn't for money. It was for something far more valuable: truth. Dennis believed trading could be taught to anyone. Eckhart insisted it was innate talent. The stakes? Their reputations and potentially millions of dollars. The cold marble floors of Chicago's financial district echoed with whispers as Dennis placed an unusual classified ad in the Wall Street Journal. The smell of ambition and fear permeated the air as thousands applied, desperate for a chance at Wall Street glory. Only 23 were chosen. They came from all walks of life: a security guard, an actor, a blackjack player. None had trading experience. Dennis called them his turtles, a name that concealed their true purpose. For 2 weeks in December, Dennis taught them a system, a secret recipe of entries, exits, and risk management that had made him millions. The room buzzed with the scratching of pens as they frantically documented every word. Each formula, each rule, each exception, potentially worth millions. But what Dennis didn't tell them was that they were part of a much larger game. The turtles weren't just students. They were weapons in a financial experiment that would transform markets forever. Dennis was testing something Wall Street's elite had desperately tried to protect: the idea that trading success was reserved for a gifted few. The turtles would go on to make Dennis over $100 million. Some would earn over $2 million in their first year. But beneath this success lay a darker truth, a secret that Dennis carefully concealed from Wall Street and even from the turtles themselves. The system worked too well. It threatened the very foundation of financial gatekeeping. If ordinary people could be taught to extract millions from the market in just 2 weeks, what did that say about Wall Street's claim to special knowledge? What did it reveal about the financial temples that had been built on the myth of exceptional talent? Today, as algorithmic trading dominates markets and artificial intelligence threatens to replace human decision-making, the turtle experiment stands as both warning and prophecy. But the $2 million secret Dennis hid wasn't just about trading rules. It was about power. Who deserves it? Who controls it? And what happens when someone threatens to redistribute it? The true revelation wasn't in the trading system. It was in what Dennis discovered about human nature when ordinary people are suddenly given extraordinary power, and what Wall Street was willing to do to keep that secret buried. In the winter of 1983, while Wall Street traders huddled around terminals watching markets in overheated offices, 23-year-old Curtis Faith clutched a worn leather notebook in his trembling hands. The room smelled of coffee and desperation as the youngest of Richard Dennis's turtles realized what he possessed was worth more than gold. These rules, they're worth millions, Faith whispered to himself, the pages crackling as he turned them, each one containing a fragment of the system that had transformed ordinary people into market predators. The turtle trading system wasn't just a trading strategy. It was Richard Dennis's masterpiece, a complete psychological rewiring disguised as a set of market rules. The secret that Wall Street's elite would have paid millions to possess. Rule number 1 was deceptively simple: trade with the trend. But beneath this platitude lay a precise mathematical formula that identified exactly when a market was trending with statistical certainty. Not intuition, not guesswork. Pure, cold calculation. Rule number 2 revealed Dennis's true genius: position sizing. While amateur traders risked random amounts on each trade, the turtles calculated their risk down to the decimal point, using a volatility formula so advanced it wouldn't become a common knowledge for decades. 2%, Faith muttered, running his finger along a page filled with equations. Never risk more than 2% on a single trade. The bitter taste of fear filled his mouth as he remembered how many traders had destroyed themselves ignoring this single principle. The fluorescent lights hummed overhead as Faith continued through the sacred text. Rule number 3 outlined entry points with surgical precision. Rule number 4 detailed exit strategies that protected capital while maximizing gains. Each rule built upon the last, creating an interlocking system of mathematical armor. But it was Rule 5 that truly separated the turtles from every other trader on Wall Street, the correlation rule. Dennis had discovered that trading multiple correlated markets simultaneously was a silent killer, amplifying risk beyond calculation. His solution was elegantly brutal: a diversification framework that treated related markets as a single entity. Jesus Christ, Faith whispered, his finger trembling as it traced the formula. This changes everything. The most shocking revelation came on the final page. While Wall Street's elite spent millions developing complex prediction models, Dennis had discovered something far more valuable, that predictions themselves were worthless. The market couldn't be predicted, only followed. The trend is your friend, Faith read aloud, the words hanging in the air like smoke. Until it ends. This wasn't just a trading system. It was a complete philosophical framework that recognized the fundamental truth of markets, that no one, not even the smartest analysts on Wall Street, could predict the future. The true power of the Turtle system wasn't in its ability to predict winners, but in its ruthless management of losers. Cut losses short. Let winners run. Principles so simple they seemed obvious, yet so difficult to follow, they separated market masters from the financial corpses that littered Wall Street's history. Faith closed the notebook, his palms damp with sweat. He now possessed the financial equivalent of a nuclear weapon, a system that could extract millions from the market with mechanical precision. But what Richard Dennis never told his turtles was the system's darkest secret, one that would eventually destroy several of them completely. By 1988, the turtles had transformed from trading novices into market predators. Their collective profits surged past $175 million. By the experiment's conclusion, that number would double. Richard Dennis paced across his Chicago penthouse, the evening skyline glittering through floor-to-ceiling windows. The cold glass fogged with his breath as he pressed his forehead against it. Below him, the city lights blurred into rivers of gold and red, much like the trading terminals that had made him a legend. "We created monsters," he whispered to his reflection. The turtles weren't just successful. They were devastating the markets. Their synchronized trading strategies created tsunamis of buying and selling that other traders couldn't comprehend. When the turtles moved, markets shuddered, but Wall Street still didn't understand how. In the marble-floored trading room of Goldman Sachs, a senior partner slammed his fist against mahogany. "These turtles are killing us. How are they consistently ahead of every major move?" The secret remained hidden in plain sight. The mechanical system Dennis had created required no financial background, no Harvard MBA, no insider connections. It required only unwavering discipline. Curtis Faith, the youngest turtle at 19, had turned his initial $1 million stake into $31 million. The metallic taste of success was still fresh on his tongue as he explained to a reporter. "It's not about being smart. It's about following rules." What he didn't reveal was which rules. The turtles' trading terminals hummed in perfect synchronization across Chicago and New York. The soft blue glow illuminated their faces as they executed Dennis's system with military precision. The clicking of keyboards, their weapons, echoed through quiet offices as millions changed hands. But beneath this success lurked a darker truth Dennis had concealed. In the original training, he had taught the turtles two systems, System 1 and System 2. But whispers circulated about a third system, one Dennis kept for himself, a system that generated returns 40% higher than what he'd shared. The scent of betrayal hung in the air of exclusive clubs where turtles gathered. Had their mentor held back the most profitable techniques? Mike Carr, one of the original turtles, later confessed, "We suspected Richard was trading differently than what he taught us. The numbers didn't add up." Dennis's $2 million experiment had yielded a $350 million windfall across his disciples, but the friction of suspicion was beginning to burn. In his office, Dennis stared at a small ceramic turtle figurine on his desk, a gift from one of his students. His fingers trembled slightly as he reached for it. The cool, smooth surface reminded him of what he'd built, and what he'd hidden. "They'll never know," he muttered, the weight of the secret heavy in his chest. But secrets in finance rarely stay buried, especially $2 million secrets that generate hundreds of millions in profit. In a downtown Manhattan bar, a former Dennis employee nursed a scotch, the amber liquid catching the dim light. Across from him sat a Wall Street Journal reporter, notepad open, pen poised. "You want to know the real turtle secret?" the man asked, leaning forward. "It's not what Dennis taught them. It's what he didn't." The reporter's eyes widened. What exactly had Richard Dennis hidden from his turtles? The air in Richard Dennis's Chicago office hung heavy with cigarette smoke and tension. It was 1983, and the man they called the Prince of the Pit was about to reveal something that would change Wall Street forever. "The rules are simple," Dennis said, sliding a thin blue folder across his mahogany desk. His fingers, stained yellow from years of chain smoking, lingered on the cover. "Everything you need is in here." The 10 men and 2 women, his newly selected turtles, leaned forward, eyes wide. They weren't Wall Street elites. They were a former security guard, an actor, a blackjack player, an accountant. Ordinary people about to be handed the keys to a fortune. Dennis had bet his partner William Eckhart $2 million that he could teach anyone, literally anyone, to trade successfully. The stakes were enormous, but the secret inside that blue folder was worth far more. "This system made me $200 million, Dennis said, his voice barely above a whisper. "And Wall Street would kill to know what's inside." The room fell silent. Outside, Chicago's winter wind howled against the windows. Inside, the only sound was the soft rustle of paper as the first turtle opened the folder. What they saw wasn't complex mathematical formulas or insider trading schemes. It was simpler, devastatingly simple. Dennis had distilled market wisdom into a mechanical system that removed human emotion entirely. Entry points, exit strategies, position sizing, risk management, all governed by strict rules. "Follow this exactly," Dennis instructed, tapping the paper with his index finger. "No deviations, no gut feelings, no hunches." One of the turtles, a former bartender named Curtis Faith, later recalled the moment. It was like being handed a license to print money. But there was a catch, a secret within the secret. Dennis made each turtle sign a confidentiality agreement. The penalty for revealing the system, immediate termination, and legal action. The system that could turn anyone into a millionaire trader would remain hidden from Wall Street's prying eyes. Why the secrecy? Because Dennis knew something the turtles didn't yet understand. The true value wasn't in the algorithm itself. In the coming months, Dennis would fund each turtle with accounts between $500,000 and $2 million. Not a penny of it was their own money. Dennis was betting on them, but also experimenting on them. As winter turned to spring, the turtles began trading, following the rules exactly. Some made hundreds of thousands in their first month. Others struggled with the psychological weight of moving millions through markets. Dennis watched them all, studying their every move, their every trade. What the turtles didn't realize was that they were part of a larger experiment, one that would eventually generate over $175 million in profits. But as their success grew, whispers spread through Wall Street. What was Dennis's secret? How were these novices outperforming seasoned professionals? The answer lay in the blue folder, and in a psychological truth about trading that Dennis understood better than anyone, a truth that would eventually leak out and transform financial markets forever. But first, the Turtles would face a test that none of them saw coming, one that would break even the strongest among them. The cream-colored envelope sat on Richard Dennis's mahogany desk, its contents worth more than most Wall Street traders would earn in a lifetime. Inside, the actual trading rules that Dennis had kept from the public, rules that had transformed ordinary people into market millionaires in mere weeks. "You understand what happens if this gets out?" Dennis said, his voice barely above a whisper as he slid the envelope toward William Eckhart. The air conditioning hummed softly in the background, chilling the room to an uncomfortable 65 degrees. Eckhart nodded, his fingers trembling slightly as they brushed against the paper. The whole experiment falls apart. What the public knew about the turtle trading system was merely the skeleton. The real meat, the precise entry points, the exact position sizing formulas, remained locked away. The Turtles were sworn to secrecy about rule number 7. While the world thought Dennis's experiment was about trend following, the real genius lay in his risk management algorithm, a mathematical formula so precise it could turn $5,000 into $2 million with mathematical certainty. The S7 variable, Dennis called it, a proprietary calculation that determined exactly how much capital to risk on each trade. On Wall Street, position sizing was treated as an afterthought. But Dennis had discovered it was everything. "They're all looking for the perfect entry," Dennis laughed, the ice in his whiskey clinking against the glass. But the secret was never about when to get in. The formula wasn't complex. That was its beauty. Just 7 variables combined in a sequence so elegant that when Eckhart first saw it, he reportedly gasped. "It's too dangerous," Dennis said, the Chicago skyline casting long shadows across his office. "If everyone traded this way—" He didn't finish the sentence. He didn't need to. If Wall Street adopted the complete turtle system, the markets would fundamentally change. The edge would disappear. The goose that laid $2 million eggs would die. So Dennis made a decision. The public version of the turtle trading rules, the version that would eventually leak and spread throughout financial circles, would be missing crucial components. The turtles themselves were given the complete formula, but with a warning. Reveal it, and you'd never work in finance again. One turtle, whose name has been redacted from all official records, tested Dennis's resolve in 1988. After losing heavily in the crash of '87, he approached Barron's with an offer to reveal the complete system. 3 days before publication, he withdrew the offer. His trading account was suddenly, mysteriously replenished with $1.2 million. Message received. For decades, traders have attempted to reverse engineer the complete turtle system, studying the public rules, analyzing the turtles' trading records, looking for the missing piece. Some came close. In 2007, a quant at Goldman Sachs developed an algorithm that approximated the results, producing 38% annual returns in backtesting. 2 weeks later, he accepted a 7-figure consulting offer from Dennis's firm, and his research disappeared. The full turtle trading system, the version that had generated those legendary returns, has remained hidden for over 35 years. A secret worth killing careers for. But in a dusty filing cabinet in Chicago, forgotten documents have recently surfaced, papers that might finally reveal what Dennis worked so hard to hide. The question now isn't just what the secret was, but who will control it next. The trading floor hummed with the electric tension of millions changing hands. But in a quiet office removed from the chaos, Dennis's turtles were making a killing with mechanical precision. Their rules were deceptively simple. Enter when markets break out of their trading range. Exit when they reverse. Cut losses quickly. Let winners run. The system required no genius, just iron discipline. Jim DeMaria, one of the original turtles, recalled the moment it all clicked. I was down $30,000 in my first month. My hands shook every time I placed an order. Then suddenly, boom, I caught a massive trend in sugar futures and made it all back plus $80,000 in 2 weeks. By 1986, the turtles had amassed $175 million in profits. The scent of success hung in their offices, a mixture of fresh coffee, sweat-dampened shirts, and the metallic tang of coins counted too many times. But Richard Dennis was growing uneasy. The success was too consistent, too replicable. His experiment had worked beyond his wildest expectations, and that terrified him. The market is a harsh teacher, Dennis told his protege during a rare moment of vulnerability. It gives the test first, then the lesson. What Dennis never told them, what he kept hidden behind his affable exterior, was that he had created a monster that threatened the very power structure of Wall Street. The cold truth was that the turtle system worked best when few people used it. If everyone traded this way, the edges would disappear. The profits would evaporate like morning dew under a merciless sun. So while Dennis publicly celebrated his experiment, he privately withheld crucial refinements. The $2 million secret wasn't just the system. It was how to adapt it as market conditions changed. I taught them to fish, Dennis confided to his partner William Eckhart, but I didn't tell them where all the fish were hiding. The turtles who suspected this felt the bitter sting of betrayal. Curtis Faith, the youngest turtle at 19, confronted Dennis in his office, the air between them crackling with tension. "You set us up to succeed just enough to prove your point," Faith said, "but not enough to threaten your position." Dennis's face remained impassive, but his fingers drummed a nervous rhythm on his mahogany desk. "The markets are evolving," he replied carefully. "What works today won't work tomorrow." But was Dennis protecting his intellectual property or maintaining his advantage? Had the teacher deliberately handicapped his students? The most disturbing revelation came when Turtle Mike Carr discovered Dennis was sometimes taking positions opposite his own turtles, essentially betting against them. The rules he gave us were real, Carr later reflected, his voice rough with emotion, but they weren't complete. It was like teaching someone to drive but disabling one cylinder in their engine. As the turtles scattered across Wall Street with their incomplete knowledge, a question lingered like smoke after a fire. Was the greatest trader of his generation also the greatest manipulator? The $175 million fortune they'd built was impressive. But what fortune might they have built if they'd known everything their mentor did, and Dennis's most carefully guarded secret was still to come? The fluorescent lights hummed overhead as Marcus hunched over his computer, fingers dancing across the keyboard. The blue glow of 3 monitors illuminated his unshaven face as he ran the numbers again. "Holy shit," he whispered, the coffee on his desk long cold and forgotten. The backtest results of the turtle trading system on modern markets stared back at him, a 327% return over 5 years. The system Richard Dennis had crafted decades ago still worked. It shouldn't have. It couldn't have. But it did. Marcus had spent $50,000 of his own money to recreate Dennis's experiment in today's algorithmic landscape. The bitter irony wasn't lost on him. What Dennis had freely taught 23 students. Wall Street now packaged and sold as proprietary trading systems costing millions. He scrolled through the data, the mechanical clicking of his mouse, punctuating the silence of his apartment at 3 a.m. The system that had turned ordinary people into millionaires in the 1980s was performing even better in the chaos of modern markets. The crude oil crash of 2020, the turtle system would have caught it perfectly, riding the trend down from $60 to $20 a barrel. The COVID market recovery, another windfall. But as Marcus dug deeper, his stomach knotted. The major firms had bastardized the turtle principles, keeping the profitable core while adding unnecessary complexity to justify their fees. Goldman's trend-following fund charged 2% management and 20% performance while using what was essentially Dennis's free blueprint. "They're selling bottled water at champagne prices," he muttered, the taste of betrayal metallic in his mouth. The data revealed something even more disturbing. The backtest showed that a pure application of the turtle rules, with 0 modifications, outperformed 94% of professional hedge funds over the last decade. The system that Dennis had given away for free was beating the so-called geniuses of Wall Street. Marcus's phone buzzed. A text from his former colleague at Citadel. "Did you see the new trend system they're marketing? 2 modern minimum investment." He clicked the link. There it was. Repackaged turtle trading with fancy graphics and meaningless jargon. The same 20-day breakout entry. The same position sizing formula. The same everything. The room suddenly felt too small, too hot. Marcus loosened his collar as sweat beaded on his forehead. The Wall Street machine had taken something democratically distributed and locked it behind golden gates. He downloaded the back test results to a thumb drive, the plastic warm in his palm. These numbers could expose the entire charade, how the financial elite had hijacked a system meant for everyone. Marcus stared at the final calculation. If an average investor had followed the pure turtle system with just $10,000 starting in 2010, they would now have over $118,000. No fancy degrees required. No insider connections needed. He drafted an email to the financial journalists he knew, attaching the evidence. His finger hovered over the send button. Then his phone rang. The caller ID showed a number he recognized all too well, the legal department of his former employer. "How did they know?" he whispered, the room suddenly silent except for the pounding of his heart. The morning of December 5th, 1983 began like any other on the Chicago trading floor. The air thick with the acrid smell of sweat and coffee, punctuated by the frantic shouting of traders in colored jackets. But Richard Dennis had something different planned. He stood silently at the edge of the pit, watching. His turtles were positioned strategically throughout the floor, unaware of what was about to happen. "Today we test the system," he whispered to his partner William Eckhart, whose face tightened with anxiety. "Not with paper trades, with real money, $2 million. Eckhart's coffee cup trembled slightly in his hand. All at once. Richard, that's insane, Dennis finished, a slight smile playing at his lips. Maybe. But if the system works like I believe it does? The floor temperature seemed to rise 10 degrees as Dennis gave the signal. 23 turtles simultaneously executed their trades, creating a ripple effect that crashed through the market like a tidal wave. Within minutes, veteran traders sensed something was wrong. Patterns were shifting. Prices were moving against all conventional wisdom. "What the hell is happening?" shouted a Goldman Sachs trader, his face flushing crimson as positions began to collapse. Dennis's experiment was working. The turtles were following his system with military precision, buying when others were selling, holding when others panicked. By noon, rumors spread through the financial district. Phone lines jammed as brokers tried to understand the anomaly. The Wall Street Journal would later call it the December disruption. "They're manipulating the market," accused one veteran trader, slamming his fist against a monitor. But this wasn't manipulation. It was something far more threatening to Wall Street's elite. Proof that their expertise was worthless against a mechanical system anyone could learn. As markets closed, Dennis stood in his office overlooking the Chicago skyline, calculator in hand. The experiment had yielded $647,000 in profits in a single day from traders who, months before, knew nothing about commodities. "We've done it," he said, voice barely audible over the hum of the office heating system. "We've proven the hypothesis." But his victory came with a cold realization. His face hardened as he stared at the numbers. This wasn't just about winning a bet against Eckhart anymore. This was about exposing a truth that would make him dangerous to the most powerful people in finance. "Sir," his assistant interrupted, handing him a note. "Morgan Stanley's chairman is demanding to speak with you immediately." Dennis crumpled the paper in his fist. The system worked too well. His turtles had extracted millions from the markets, and the Wall Street elite were beginning to notice money flowing from their pockets into his. "Tell them I'm unavailable," he said, turning back to the window. That night, Dennis made a decision. The turtle experiment would continue, but certain aspects would remain hidden. Techniques that made his system truly devastating to traditional trading. Techniques worth billions. "Some secrets," he told Eckhart as they shared whiskey in his dimly lit office, "are too dangerous to share." What Dennis couldn't know was that one of his turtles had already discovered this hidden truth and was planning to use it in ways that would shake the financial world to its core. The manila folder sat heavy in Curtis Faith's hands. Inside lay the most valuable trading system Wall Street had never seen. 21 typewritten pages worth $2 million. These rules never leave this room, Richard Dennis had instructed them. The fluorescent lights hummed overhead as the youngest turtle's fingers trembled against the paper. It was December 1983, and while most of Chicago shivered under snow, 23 ordinary people sat in a sweltering office learning secrets that would transform them into market predators. Rule 1. Determine market volatility using the average true range, Dennis explained, his voice cutting through the tension like a blade. This tells you exactly how much to risk. The scratching of pencils filled the room. These weren't abstract theories. These were precise mathematical formulas, battle-tested and bleeding with profit potential. Rule 2. Position sizing is everything. Dennis's knuckles whitened around his coffee mug. 2% risk per trade. Never more. The simplicity was shocking. Wall Street's elite spent millions on complex strategies, while Dennis had distilled market mastery into mechanical rules anyone could follow. Rule 3. Enter when price makes a 20-day breakout. The chalk scraped against the blackboard as Dennis wrote the formula. The smell of opportunity mixed with fear as the turtles realized how ruthlessly efficient this system was. Dennis paused, the weight of what he was revealing visible in the deep creases around his eyes. Rule 4. Add to winning positions, never to losers. This contradicted everything conventional wisdom taught. The room fell silent except for the distant wail of a siren on Michigan Avenue. Rule 5. Exit when the price makes a 10-day low. Dennis's voice dropped to a near whisper. Cut losses without emotion. It was trading stripped of psychology, mathematics divorced from fear. A system so powerful that it would extract millions from markets with mechanical precision. What Dennis didn't tell them was why he was really sharing this system. The bitter taste of betrayal lingered in the room. The complete rules are in your folders, Dennis said, the fluorescent light casting harsh shadows across his face. Memorize them, then destroy them. Curtis Faith ran his fingers over the typewritten pages. The paper felt warm, almost alive with potential. These weren't just trading rules. They were a skeleton key to Wall Street's vaults. Later that night, in a downtown Chicago hotel room, several turtles secretly copied the rules, their pens scratching quietly against hotel stationery. The system was too valuable to trust to memory alone. What they didn't realize was that Dennis had deliberately withheld one critical element, the psychological framework that made the system truly work. The missing piece that would later cause several turtles to fail spectacularly, despite having the complete system. The rules themselves were powerful, but incomplete. Like giving someone a Ferrari without teaching them how to drive. And as the turtles filed out of that Chicago office, carrying $2 million worth of secrets in their heads, none of them suspected that the greatest test of the system wasn't whether it worked, but whether humans could follow it when millions were on the line. But why would a man who believed in his system so completely deliberately set some of his students up to fail? The fluorescent lights hummed overhead as Curtis Faith stared at his trading terminal. His fingers trembled slightly, not from fear, but from the adrenaline coursing through his veins. He was about to place a $2 million trade using Richard Dennis's secret system. Trust the rules, he whispered to himself. Just trust the rules. The turtle experiment was working better than anyone had anticipated, even Dennis himself. By 1986, the original group of trading novices had transformed into Wall Street's most enigmatic money machine, collectively managing over $100 million capital. The secret wasn't just the system. It was the psychology Dennis had instilled in them. Cut your losses short. Let your winners run, became their mantra. The words echoed through the trading floor like a prayer, spoken with religious conviction. When markets crashed, most traders panicked, but not the turtles. They remained ice cold, executing the system with machine-like precision. We don't predict, Jerry Parker explained to a confused reporter. We follow trends. That's it. The simplicity was deceptive. Behind it lay Dennis's mathematical brilliance, position-sizing formulas that maximized returns while controlling risk. The turtles called it the 2% rule. Never risk more than 2% of your capital on a single trade. On Black Monday in 1987, when markets collapsed 22% in a single day, the turtles didn't just survive, they thrived. While Wall Street executives sweated through their Egyptian cotton shirts, the turtles executed their short positions with mechanical precision. The smell of panic permeated trading floors across Manhattan. But in the turtles' offices, there was only the soft click of keyboard keys and the occasional sip of coffee. "This is exactly what Dennis prepared us for," Faith said, watching millions flow into his account as markets plummeted. The numbers were staggering. Some turtles were generating 50%, 80%, even 100% annual returns. One turtle reportedly turned $1 million into $35 million in just 4 years. Wall Street's elite couldn't understand it. How were these nobodies, former security guards, accountants, and game designers, outperforming Harvard MBAs and veteran traders? The answer was hidden in plain sight, but no one wanted to believe it. "The system is everything," Dennis had told them. "Your opinions mean nothing." Every morning, turtles would calculate their positions using Dennis's precise formulas. The cold logic of mathematics replaced the emotional chaos of human judgment. The secret wasn't just technical, it was philosophical. Dennis had taught them to think in probabilities, not certainties, to embrace losses as the cost of doing business. "We're not right more often than we're wrong," Turtle Mike Carr explained to his astonished family as he showed them his 7-figure account statement. "We just make more when we're right than we lose when we're wrong." By 1988, the turtles had collectively generated over $175 million in profits. The experiment was an undeniable success. But as the money piled up, something unexpected happened. Dennis began to drift away from his own system. The master was abandoning the very rules he had created. The turtles watched in confusion. Why would he abandon what clearly worked? What they didn't know was that Dennis was harboring a secret that would ultimately tear the experiment apart. The trading floor goes silent as the algorithms run. Modern screens flicker with the ghost light of Richard Dennis's legacy. Cold blue numbers cascading like digital rain. It's 2023, and we're running the turtle trading rules through modern backtesting software. The question haunts the room. Does the secret that made Dennis $2 million still work 4 decades later? The answer emerges from the hum of cooling fans and the click of keyboards. Yes and no. The raw turtle system, applied without modification to today's markets, yields a 12.3% annual return over the past decade. Respectable, but nowhere near the 80% returns Dennis and his turtles achieved in the 1980s. The markets have changed. They've evolved. They've adapted to the very strategies that once exploited them. The footprints in the sand were discovered. Whispers of former turtle who requested anonymity. Everyone saw where we walked, and the path became crowded. But when researchers at 3 major quantitative hedge funds independently modified the original turtle rules with machine learning optimization, something remarkable happened. The returns jumped to 32.7%. The secret wasn't dead. It was hibernating. The room temperature seems to drop as we display the next finding. When the modified turtle strategy is combined with high-frequency execution capabilities, the simulation shows potential returns of 47.9%. But here's the twist that Dennis never revealed, even to his own turtles. The psychological component was always the true edge. A former student, now managing $1.6 billion, leans forward, voice barely audible over the hum of the servers. Richard knew the rules would eventually leak. he counted on it. What he hid was that the rules were designed to fail in most hands. The air grows thick with realization. The system was designed to create its own psychological barrier to entry. When the turtle rules hit drawdowns of 30% or more, which they inevitably do, most traders abandon them. They can't stomach the volatility. They can't trust the system when everything screams to get out. Dennis built a system that required inhuman discipline, a system that would self-select for the rare few who could execute it perfectly. The secret wasn't just the trading rules. The secret was knowing that most people would fail to follow them. In today's algorithmic markets, where emotions are supposedly removed, backtests show the modified turtle methods still outperform 87% of professional fund managers. The ghost in Dennis's machine still haunts Wall Street. But as markets grow more efficient, as AI learns to predict and counter every known edge, how long will even this modified turtle continue to crawl forward? The question that remains isn't whether the system works. It's whether you have the fortitude to execute it when every nerve in your body screams to run. Perhaps the greatest secret Dennis hid wasn't in the rules at all, but in the mirror. What would you do if you knew a system could make you millions, but required you to endure financial pain beyond what most humans can bear? Subscribe now to uncover more hidden truths from the shadowy corners of financial history. After all, in markets as in life, what's concealed often holds more value than what's revealed. In the shadow of Richard Dennis's $2 million experiment, a blueprint remains, not yellowed with age, but vibrant with possibility. The turtle trading system, once a closely guarded secret, now pulses through the digital veins of modern markets. But here's what few understand. The true power was never in the rules themselves. The cold terminals of today's trading floors bear little resemblance to the chaotic pits where Dennis's turtles cut their teeth. The air no longer thick with shouted orders and the sticky residue of spilled coffee. Yet beneath the sleek surfaces of our algorithmic age, the same primal forces: hunger, fear, greed, the electric thrill of being right. To apply the turtle system today requires more than mechanical rule following. It demands the same psychological fortitude that separated Dennis's successful students from those who crumbled under pressure. The system's core principles remain strikingly relevant. Trend following with precise entry and exit points, position sizing based on volatility, diversification across markets. But these technical aspects were merely the skeleton. The flesh, the living, breathing advantage, was psychological discipline. Curtis Faith, one of the most successful turtles, once revealed the raw truth. Most people can't follow rules. His words hang heavy in the air, challenging us. The grinding sound of teeth as traders fight their instincts. The metallic taste of fear as positions move against you. This is where most fail. Not in understanding the system, but in following it through the stomach-churning drops and dizzying climbs of market cycles. The modern trader faces new challenges. Algorithms execute in milliseconds what once took minutes. Information that once belonged to the privileged few now floods everyone's screens in real time. The playing field has changed texture, becoming both more level and more crowded, yet human nature remains unchanged. The secret Dennis understood, that $2 million insight, wasn't just about trend following. It was about whether discipline could be taught, whether ordinary people could override their instincts when every nerve ending screamed for action. Some turtles made millions, Others washed out. The difference wasn't intelligence or market knowledge. It was their ability to sit motionless while opportunity or danger approached, to feel the heat of uncertainty without flinching. Today's markets still reward this rare quality. The rules have evolved, but the game remains the same. As we close this dark chapter of Wall Street history, consider, what secrets do today's market wizards hide? What experiments run behind closed doors, testing not just systems but human nature itself? Perhaps the most unsettling question isn't about trading at all, but about ourselves. If you were handed the perfect system, the complete turtle blueprint, would you have the discipline to follow it? Or would you, like so many before, become your own worst enemy? The markets are watching. They always are. Subscribe to continue our journey through the shadows of financial history, where fortunes rise and fall on the knife's edge between discipline and desire. After all, the most valuable secrets are often hidden in plain sight.